Iran had Tuesday military drills in the Strait of Hormuz, partial closure of the Strait of Hormuz, and then Thursday they had joint drills with Russia, also partial closure of the Strait of Hormuz. Potential opportunities to kind of lay the strategic groundwork for a future action in the region or in the strait. The immediate risks, I think, have been maybe overemphasized in a lot of the speculative headlines that people have been gravitating towards. Welcome to The Energy Desk, a podcast from Mobius Risk Group. In this series, we break down the macro forces and fundamental trends shaping global energy markets. We cover everything from geopolitics and policy to supply, demand, and the price risks that we're watching behind the scenes. Each episode is designed to cut through the noise and give you clear, actionable insight into what's driving today's energy landscape and what it means for what comes next. You can follow the show wherever you get your podcasts. You can share feedback or ask questions by emailing podcast@mobiusriskgroup.com. Let's get started. Back here on the Energy Desk, sitting here Friday, February 20th with Mohit Arora. How's it going, Mohit?
Good. How are you doing?
Doing great. Plenty of things to be interested in and excited about following in all of the energy markets these days, particularly crude. And we've been chatting about this, it seems like, for many, many months, been kind of in and out of the headlines, definitely back in now, but the US-Iran geopolitical landscape. And we really saw that have an effect on the market over the last week or two. And I think that we're potentially shaping up for an interesting next few weeks. And it's a timely opportunity for us to maybe just cover some of the more scenario-specific thoughts or considerations that the industry might have and kind of get into where we see some of this potentially moving and maybe opportunities in there as well. So where would you like to start with this?
Let's set the backdrop as where we were at the start of the year. Maybe you can kick it off with inventories and I can touch on where prices and markets were, and then we can go from there.
Yeah, that's great. So on the kind of broad strokes landscape at the start of the year, headline narratives really grounded around this oversupply expectation. And we had a series of different developments that have kind of influenced the fundamental picture in the early portion of the year. You have US-Venezuela developments towards the end of last year into this year. That's going to end up being a little bit of incremental supply growth. On the other side, you have Russia-Ukraine developments and then some Ukraine attacks on, say, the Kazakh export facilities in the Black Sea, and then some unrelated production issues or potentially related production issues in Kazakhstan that for January took off about 900,000 barrels a day of production. We had some supply impacts that really kind of tightened the fundamental picture more than the market was anticipating, helped ease some of the upside risk to a supply that a lot of the market was concerned about. And where we are now has been kind of transitioning to more concern about the Iran picture. So we have the kind of ongoing negotiations for the last couple of years between the US and Iran about their nuclear program and the US perspective that Iran should not have a nuclear weapon and the concerns about their enrichment. So that had a kind of culmination last June that the market participated in and then faded away into the background and we're back again. So the concerns haven't really changed. It is Iran as a producer. They're producing in January about 3.13 million barrels a day, according to secondary monitoring. But then there's the added layer of the concerns about regional supplies. So that includes the regional producers. You're next to Saudi Arabia, who's over 10 million barrels. You have Iraq, who's 4.2-ish million barrels. And then you have kind of a long list of kind of low digit million barrel per day producers. And you have the Strait of Hormuz, which is responsible for about a quarter-ish of global energy flows. And that's about 20 million barrels a day of petroleum liquids that are flowing just through that Strait of Hormuz, and Iran is sitting right next to that. So that, I think, is really the biggest concern for the market, is if there's any impact, a sustained impact of any magnitude to Strait of Hormuz, or I think the less likely scenario is a regional producer. And then alongside this fundamental landscape, you have kind of a very fascinating dynamic with the speculative community, which has been kind of ebb and flow, but generally trending to historically short levels. So towards the end of last year, we got to kind of peak short conditions, and we've eased a little bit from there. But as we were just discussing, today's data from the CFTC and ICE, we're seeing Brent and crude or WTI spec shorts increased last week and are still in the top quartile there. So that's kind of the rough breakdown. And then I think maybe if you want to dig into any of that, but also on some of the price signals that you're seeing that are interesting, that might add to the stuff that we discuss later.
Yeah. So just touching back to where you were saying fundamentals for the first half of this year were expected to be bearish, oversupply concerns, and plenty of floating barrels out there. So the specs got particularly short, and they've maintained those shorts, and that's kind of related to those fundamentals. And what's happening now with the geopolitical part of it is they have two choices. They can cover or they can protect their losses. And I think some of what we've been seeing over the last couple of weeks with the US-Iran, I'll say disagreements increasing, has been a lot of upside call buying. So not only has price gone up in the front, we were early in the year, we were about $56. Now we're at about 66 basis TI. Brent's at almost $72. And now there's a backwardation in the curve too. Early in the year, it was sort of a shallow contango. And now it's a backwardated curve, about $4 roughly on a 12-month spread. Vols have gone up. They were kind of in the bottom quartile, maybe 35th percentile. Now they are in the 70th, 75th percentile in the front. Call skew has gotten really well bid because, like I was saying, I think from a spec perspective, they have two things. They can just buy their delta back. But if they're still fundamentally bearish, they don't want to do that, but they do want to protect themselves. And to do that, you buy calls. And so that upside call market has gotten really well bid. The other thing which I'd also mention is part of the Iran disagreement has been not just on the nuke side, right? I mean, you and I have talked about this, and they want to limit it to not even just nukes. They're saying, okay, we want to hold our enrichment here, while the US position is that it's not going to happen. You need to dismantle.
Yeah.
And not only that, Iran has been talking about their underground missile bunkers, and now that's also in play. And they're saying, no, that's not in play. And ditto with the proxies. I think there's a lot more on the table now than there was considered maybe a few months ago.
Yeah, definitely. The nuclear negotiations are the headline of the conversation, but you have ballistic missiles, you've got regional proxies. So it's most likely going to be a multi-layered, multi-dimensional, and probably protracted conversation between the US and Iran and regional parties, especially as we saw yesterday, first Board of Peace meeting. That was a discussion and a kind of centerpiece of President Trump's dialogue at the event was just kind of covering Iran's role in regional stability or instability for that matter, and what that means looking ahead as they try and kind of build this peace initiative with a group of countries that is leading or led by kind of Middle East representation. So we'll get into that because I think that there's more for us to highlight there and have some clips to show. Just to kind of final point, as you mentioned, on the fundamentals, you pointed out the inventory side, and I realized I didn't really mention much on that, where we are now. So the expectation was that we were going to be oversupplied. After the last few weeks, we still have global floating storage at the highest seasonal level since 2016. It's been coming off since the end of last year. A good chunk of that, certainly sanctioned barrels. And so that's more of a question of when those will hit, but not if they will hit kind of thing. But for the observable onshore inventories, looking at the US, we have a pretty interesting change just in the last couple of weeks. We had a bearish trend there that was pretty extended for really through the first part of February. But we got up to basically the second quartile, just kind of around the 35th percentile for this time of year relative to the last 10 years for US crude inventories, excluding SPR. And we have since come back off. And after last week's change for the US, which was about 9 million barrels, which was the largest of that period or that season of the last decade. That dropped us all the way back down to the 10th percentile. So we're back to kind of similar levels that we were at in the fourth quarter of 25. And for products, that's I think one of the more interesting conversations that we can have, because we had aggressive builds in gasoline. We went from the 0th percentile on November 10th to the 80th percentile the week before this most recent EIA report. That report brought us back down to just below that kind of top quartile mark, and still elevated for gasoline. Distillates has been a little bit slower. We've seen some builds, but it hasn't been as aggressive as gasoline. And we are now back to bottom quartile levels for distillates. So I think that is potentially a way for us to kind of get into some of the more scenario specific discussion and maybe where this might be represented or what opportunities might come up. And so just kind of looking at the current geopolitical environment, touched on a little bit. The latest talks this week, though, I think are important to really dig into. So we had U.S.-Iran talks in Geneva as they were having other discussions with the U.S.-mediated Russia-Ukraine peace talks. For the Iranian delegation, the interesting thing that I noticed this week was that all of the commentary coming out of Tehran really, to me, indicated that there's more progress than we've had in the last 18 months towards some type of agreement. The Iranian delegation said that there was a general agreement with the U.S. administration and what the U.S. administration wants to get from Tehran. And they agreed to go back to the drawing board, come up with a couple draft proposals, and submit those to the U.S. administration in a couple of days, was kind of the commentary. And how that aligns to this speculation for any U.S. action against Iran. The Trump administration's commentary seems to me to point to kind of a cautionary pause, so a kind of tentative deadline of 10 to 15 days. And we can play that clip here in a second from President Trump, which I think is illustrative.
Now is the time for Iran to join us on a path that will complete what we're doing. And if they join us, that'll be great. If they don't join us, that'll be great too. But it'll be a very different path. They cannot continue to threaten the stability of the entire region, and they must make a deal. Or if that doesn't happen, I maybe can understand. If it doesn't happen, it doesn't happen. But bad things will happen if it doesn't. With the commitments announced today, the Board of Peace is proving that it does. Israel, as you know, with you could say Israel and numerous countries if you want to really know the truth, but Israel and Iran, and we'll see where that goes. But when you think of Israel, we've done the biggest thing of all. We have peace in the Middle East right now. That's bigger than people said it couldn't be done. For 3,000 years, they've been talking about Middle East. They said it couldn't be done. And you look at what's happened in Gaza. And one of the keys to it was when we took those beautiful, magnificent, we just ordered 22 more of them, updated model. The B-2 bombers are incredible. I never understood the B-2 bomber. I'd watch, it's a wing. And I've never quite understood that, Johnny. I'd look at it, I'd say it was beautiful, but what does it do? It carries very big bombs. And it went into Iran, and it totally decimated the nuclear potential. And when it decimated that, all of a sudden we had peace in the Middle East, because there was a black cloud hanging over the Middle East, and if that wasn't done, that cloud would have been there. And countries like Saudi Arabia, countries like Qatar, countries like, nobody could have signed. You would have had that threat. You couldn't have had peace in the Middle East. So now we may have to take it a step further, or we may not. Maybe we're going to make a deal. You're going to be finding out over the next probably 10 days.
But then you have on the other side a lot of unofficial or speculative information coming out, whether it's anonymous sources or kind of this open source intelligence community that has been flagging the massive movement of U.S. military assets into different staging areas. So various regions in the Middle East, but also in Europe. And we have a second carrier group moving into the region. So really this kind of big buildup that could be seen as posturing. It could be a piece of the negotiation, but also could be seen as maybe preparations for more significant action than we even saw last June. And so, I'll leave it at that. And if there's something in there that you want to dig into specifically, I think that's maybe where we can go.
No, I think that's a great place to stop. I mean, the only comment I'll make, I know you're talking about products being really interesting. Even though gasoline's built a lot, one of the things we were talking about earlier is that gasoline cracks are still very elevated.
Mm-hmm.
So I think part of that is also driven by what you've talked about in previous podcasts about how a lot of the refining capacity in Russia is getting damaged and there's potential for export controls on some of the products out of there. So I think that's part of what's driving that. And yeah, I think in terms of your staging for an attack, I think I was reading somewhere that they were looking to use the UK base and I think they were declined that facility. So I think Diego Garcia is in play in terms of a launching pad. So, I mean, that's already out there in terms of what's been stated.
Yeah. Yeah. So, I think some of the scenarios that are maybe worth touching on. Odds that, just for our perspective, the odds that you have U.S. military action against Iran this weekend, which has been kind of repeatedly, I guess, speculated on in the media, seems unlikely to us because of many different factors, but one notable one being the ongoing U.S. Olympics. And so that is a pretty big publicity event. You probably don't want to line that up as that's still going on. So I think that's an important factor. Most likely not going to see any action before those close or the Winter Olympics closes down. So that's February 22nd, this Sunday. The other side of that is this kind of tentative 10 to 15 day deadline that was presented by President Trump. And based on that commentary, it doesn't really seem like there is an aggressive interest in taking action. And there's a few reasons for that. One, the commentary from the Iranian delegation has been, at least publicly, more open to negotiation than they have been, as I said before, in the last 18 months. And so you're having some progress there. And I think there's a strong interest in keeping that progress going, getting some momentum in these talks. And then the other aspect is that the Trump administration has been using the energy market as its primary lever to influence inflation and interest rates. And that principle, I think, is especially true when you are considering Strait of Hormuz flows that represent about a quarter of global energy flows. The upside risk to inflation with a severe disruption to regional supplies should not be ignored. And that is certainly a factor in the conversation right now. And that is amplified by 2026 being an election year. And so the risk to the U.S. administration, the Trump administration, and the kind of, I guess, multifaceted conversation about inflation, interest rates, and that election, I think is definitely a strong incentive to mitigate the risks to regional supplies and put as much effort into the non-kinetic options that are available at the moment. So I think that's kind of the broad strokes kind of scenario discussion. But I think the other side of that is that Iran also understands that those are the incentives for the U.S. and any U.S. action or response to U.S. action would potentially be more likely to include those types of disruption events. So, any action that influences the Strait of Hormuz. Interesting kind of part of that is that Iran had Tuesday military drills in the Strait of Hormuz, partial closure of the Strait of Hormuz, and then Thursday they had joint drills with Russia, also partial closure of the Strait of Hormuz. Potential opportunities to kind of lay the strategic groundwork for a future action in the region or in the Strait. So that includes, mines and things like that. So I think the landscape is definitely shaky, but the immediate risks, I think, have been maybe overemphasized in a lot of the speculative headlines that people have been gravitating towards. So as we kind of dig into, say, the concrete strategy or opportunities that you're seeing, what does that look like for producers, consumers, people that are actually participating?
Before we get into that, one other thing, which is a potential mitigating factor will be that there's still plenty of spare capacity. Yes, it's still in that same region, but there is spare capacity, which if this does become more than a few day or few week event, it can be called upon. The other is, like you said, there's plenty of floating barrels out there and they're sanctioned barrels. So in theory, some of them could get unsanctioned
Yeah. You have
in an emergency
potential
situation.
buffers. Yeah.
Right. And coming to what the opportunities are, I mean, I think this kind of event presents good opportunities for producers who have figured out what they want to do, what they're trying to protect. And like I said, pricing is pretty good for 26, but even more than that, because of the call skew, they can get into some kind of option structures, particularly collars, which are very attractive for 26 and bleeding into 27. And in a scenario where you do go into a kinetic situation or even imminent threat of that, given that the market's short, you could have a pretty quick move up. And as we've always been, our desk would be ready to help any of our clients to put in place any of those hedges, which may be attractive at that time. So
Yeah.
I think it's one of those opportunities where if you know what you're trying to get done, you use some of these events to achieve that.
Yeah. And I think it's important maybe to highlight from your perspective the likely impact on the curve and which part of the curve we would expect to see a lot of this.
Yeah, like we saw even in the prior US, Israel, Iran kinetic war. It's really going to be front driven and the backwardation can get much deeper than where we are. So the opportunities would be very much more 26, maybe first half of 27, but it's unlikely that they would bleed into 28.
Yeah. And so I think that that's a good place for us to kind of leave it open and just kind of reiterate that if something does happen, the desk is open and we're available to discuss more specifics for various opportunities that we're seeing or more portfolio specific kind of discussion there. I think again the speculative headlines have been at least as I've been seeing them incredibly misleading when they're citing official sources. So the kind of primary source versus secondary source has become extremely important for participants to kind of scrutinize what they're seeing in the media, because just looking at the conversation about the Board of Peace presser yesterday, you have a bunch of headlines, Axios, AP News, CBS, essentially implying that we're going to be going to war this weekend, whereas Trump's direct quote is definitely, I think, more open-ended and is indicating to me that this is most likely going to be a protracted conversation and not something that is imminent. All right, so I think that's a good overview of what we're seeing, setting the stage for future discussions, I'm sure, for any of the new details that we see. Thanks for joining us on the Energy Desk. Please keep in mind this commentary contains our views and opinions and is based on information from sources we believe are reliable. This commentary is for informational purposes, should not be considered investment advice, and is not intended as an offer or solicitation with respect to the purchase and sale of commodity interests or to serve as the basis for one to decide to execute derivatives or other transactions. This commentary is not considered promotional material.